Under this heading equities and liabilities, we will be mentioning the share capital of the company. Any other current liabilities which the company has, which is for a very short term, that can be shown here, and also the short term provisions, it can be shown here. Now, what is the share capital of the company? So, share capital of the company comprises of the money which has been contributed by the shareholders of the company. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this Unit 5, Session 1, we will be having a discussion on the meaning of financial statements. Now, we all know what are financial statements. So, financial statements includes all the profit and loss account and the balance sheet, and it is a statement of the performance of the business, how the business has fared during the current year, and what is the profit and what is the loss, and also what are the current asset values of the company. So all this will be presented in the financial statements of the company. So it is nothing but a progress report of the business performance of the company. Now let us understand the meaning of the word financial statement. So the financial statements provides a summary of accounts of a business enterprise, the balance sheet reflecting the assets and liabilities and capital as on a certain date, and income statement showing the results and operations during the certain period. So in the financial statement, it comprises of the balance sheet and the profit and loss account. Now, what is a balance sheet? How do we define a balance sheet? A balance sheet is a statement of assets and liabilities. Now, what do we mean by assets? Assets are all those things which the company owns. And what are the liabilities? Liabilities means all those things which the company is owing to the outsiders. It includes all the loans of the business. So, a balance sheet will give us the correct picture of the company. What are the actual assets of the company and what are the actual liabilities of the company. So, we have the balance sheet, and next we have the income statement. Now, this income statement is also called as the profit or loss account. So, what is the result of the business operations which are done during the year? So, throughout the year, business transactions will be carried out, and we will be keeping an account of all the transactions which are carried out throughout the year, and in the end, what is the result of all the business transactions? Whether it is a loss or whether it is a profit, we can know with the help of the profit or loss account. Usually, the accounting period will be for a period of 1 year, starting from 1st April to 31st March of the next year. So, this is the financial year which is mandatory, and this is the year which has been accepted by the Income Tax Department. So, the Income Tax Department has declared that the financial year will start from 1st April and will end on 31st March of the next year. So, this financial year, so keeping in mind the financial year, we have to prepare the books of accounts. So, according to section 2, subsection 40, financial statement in relation to a company includes. So, as per the section 2, subsection 40, so as per this section 2, it includes a balance sheet at the end of the financial year. So, the Companies Act has made it mandatory for all the companies to present the balance sheet at the end of the year. Now, why it is mandatory to present the balance sheet at the end of the year? It is because the shareholders will be interested in knowing how the company has fared, because it is with the help of the shareholders' money the company will be doing the business, and as a result of which it is mandatory for the company to present the balance sheet in the annual general meeting of the shareholders. So, once in a year, the annual general body meeting of the shareholders will be held, and the financial statements will be presented before to the shareholders, which they have to accept, and then only it will be passed. So it is mandatory for all companies to maintain the profit and loss account and balance sheet or the financial statements of the company. Then second one, a profit and loss account, or in case of a company carrying on any activity not for profit, an income and expenditure account for the financial year. Now, if the company is done with the objective of earning profit, then a profit and loss account should be prepared. But then if it is a non-profit organization, then it is mandatory for such organizations to maintain the income and expenditure statement for the financial year. Next, it also includes the cash flow statement for the financial year. Now, what is a cash flow statement? A cash flow statement is nothing but where comes, where goes. From where the cash is coming, the sources of cash and the application of cash. So, from where the cash has been received and to where it has been paid. So, that is what it means. So, financial statement also includes the cash flow statement for the financial year. And fourthly, any explanatory note annexed to or forming part of any document referred to in subclause 1 to subclause. So, with this kind of annexure to the balance sheet, so it will be presented along with the balance sheet. So, this annexure will contain the explanation for all the figures which are mentioned in the profit and loss account and the balance sheet, and it also forms a part of the financial statements of the company. So, a financial statement of the company, it includes the balance sheet of the company, then it includes the profit and loss account, it includes the cash flow statement, and also it includes the annexure to all this. An explanatory note which is attached to this document, so that also will form a part of the financial statement of the company. However, the financial statement with respect to one-person company, small company and dormant company may not include the cash flow statement. Now, suppose it is a one-person company or one man who is running the company, then they have been told that cash flow statement is not necessary, or whether it is a small company or a dormant company, then cash flow statements are not necessary, but they have to prepare the balance sheet, profit and loss account and the annexures. Section 2, subsection 41 of the Companies Act of 2013. So, it tells us the meaning of the financial year. In relation to any company or body corporate means the period ending on 31st March every year. So, whether it is a body corporate or whether it is any company, so it tells that it means the period ending on 31st March every year. So, where a company has been incorporated on or after the first day of January of a year, the first financial year will end on the 31st day of March of the following year. So, as I told you earlier, the financial year means it starts on 1st of April and it ends on 31st March next year. Suppose it is 1st April. So, you take the example of 2023, then it will end on 31st March 2024. So, a period of 1 year from 1st April to 31st March of the next year. But suppose a company has been started on 1st January, it is a new company which has started on 1st January, the company has started. Then when should the financial year end? So, the financial year will end on 31st March of the following year. So, we cannot close the accounts on 31st March of 2023 if it has started. It will not close in 2023 of 31st March 2023, it will not close. You can close it in 31st March 2024. So, in this way, it has made the rules for the financial year. Now, next, let us see what is the format of the balance sheet. So, previously, almost all the companies, they were maintaining the balance sheet in the horizontal form. But now, the Companies Act has made it mandatory for all the companies to follow the vertical format of the balance sheet. Now, let us see the vertical format of the balance sheet. So, first thing is you write the name of the company here, and then the date is very, very important. So, usually it will be 31st March. So, the date year we have to mention. Then the name of the company, XYZ Company Limited. Now, in this we have this columns here, 4 columns are there. So, in this the first column is the particulars column. Then this is the note number. So, what is this note number? So, these note numbers are the annexures to this balance sheet. So, whenever you are writing share, whatever the items are mentioned here, 1, 2, 3. So, the note 1, note 2, note 3, it corresponds to those figures which we have mentioned in the balance sheet. So, in this, then next we have the figures for the current reporting period. So, what is the present figures of the company and what are the figures for the previous year? Now, why should we have 2 amount column here? So, we can have a comparison between the 2 years. So, previous year what was the amount and this year what was the amount here. Now, in this we have the first one, that is the equities and liabilities. Now, under this heading equities and liabilities, we will be mentioning the share capital of the company. The first one is the shareholders funds. Now, what are these shareholders funds? Shareholders funds means the share capital. Now, what is the share capital of the company? So, share capital of the company comprises of the money which has been contributed by the shareholders of the company. So, if anyone who has purchased the shares of the company, he becomes the owner of the company, and as such, whatever the fund he has contributed towards the share capital, that will be mentioned in the share capital. Then, in the share capital also, we have different types. We have the authorized capital, then we have the subscribed, called up and paid up capital, etc. So, all that should be specified in this note 1, and only the final capital, whatever is there, that will be mentioned in this place. Then next we have the reserves and surplus. Now, what do we mean by reserves? So, reserves are nothing but all those funds which are kept by the company, which are set aside by the company. Now, what is this reserves? So, the reserves means it can be the capital reserve, or it can be the securities premium reserve, or it may be the depreciation reserve, or the bad debts reserve for bad debts, etc. So, some of these reserves will be created by the company to see that the company has sufficient funds, or a part of the profits will be set aside by the company to purchase a new machinery, or for the redemption of debentures, or it may be a securities premium reserve. Now, what is the securities premium reserve? Now, this securities premium reserve, it is maintained when the company has a premium issue. Now, what is a premium issue? So, when the shares are issued at a price higher than the face value, suppose the face value of the share is 100 rupees and it is issued at a price of 105, then this 5 rupees extra premium, whatever they have collected, that should be credited to the securities premium account, and it should be shown in the balance sheet. So, the reserves and surplus means all those reserves which are maintained by the company. It may be any capital redemption reserve, or it may be the securities premium, or the capital reserve, etc. Now, what do we mean by surplus? Surplus is nothing but the profits of the company. So, whatever is the profits of the company, that should be showed under the heading reserves and surplus. Next one is the money received against share warrants. Now, what are these share warrants? The share warrants are issued when the shareholders have not paid up the share call money. So, whatever the money received against the share warrants, that should be mentioned under this heading. Then, next one is share application money pending allotment. Now, what is the share application money pending allotment? So, whenever we are having a new issue of shares, then the company will collect the share application money. Now, once the share application money is collected by the company, then the next step will be the company will be issuing the shares to the shareholders. Now, this we call it as the allotment of shares. But then those applicants for whom none of the shares are allotted, so that application money has to be returned to those respective shareholders. So that application money which has been pending or which is with the company, that should be shown under this heading, share application money pending allotment. So for all those applicants who have not been allotted any of the share, it is mandatory for the company to return the share application money to those shareholders, and as such whatever money has been collected, so that we should show in this under this heading, share application money pending allotment. Now, next one, under the next heading, we have the non-current liabilities. Non-current liabilities means, in other words, it is long-term borrowings. Now, what are long-term borrowings? So, long-term means it is for a period of more than 5 years. So, if the company has taken a loan for more than 5 years or 5 to 15 years, then those we can put it under this heading, the long-term borrowings. Then the next one is the deferred tax liabilities. Now, what is this deferred tax liabilities? So, all those tax liabilities which can be deferred, or if the income tax company has given them certain time to just repay the tax, so if they have given a tax holiday or something like that, so all that can be shown under the deferred tax liabilities. Then other long-term liabilities. So other long-term liabilities, you can always show the bank loans, etc. that will be taken as other long-term liabilities, and long-term provisions. Now, what are the provisions which the company has made? So all those provisions can be shown here. Then under the next heading, we have the current liabilities. Under this, we have the short-term borrowings. Short-term borrowings means the loan taken for a period of 1 to 3 years. So, for a very short term, so all those loan amount, it should be mentioned here. The next one is the trade payables. So, the trade payables means the sundry creditors. So, whoever are there. Then other current liabilities. So, any other current liabilities which the company has, which is for a very short term, that can be shown here, and also the short term provisions, it can be shown here. Then the next line, we have the total of the liabilities column. So, this comprises of the equity and liabilities. Now, the next we have the assets. So, previously we were having this liabilities and assets. So, under this heading we had all the liabilities, under this heading we had all the assets. But now it has become equity and liabilities, and under below that we have the assets. Now, under the assets column, we have the first one as the non-current assets. So, under the non-current assets, we have the property, plant and equipment. So, non-current assets means, in other words, it is called as the fixed assets. So, under the fixed assets, we have tangible asset. Now, what are tangible assets? Tangible assets are those assets which can be touched and felt. So, tangible assets, that we will write here. Intangible assets. A good example for intangible asset is the goodwill. Then capital work in progress. So, what is this capital work in progress? So, whether there are any goods which are in progress, that can be shown here. Then intangible assets under development, that can be shown here. Then, so all this comprises of the non-current assets. Then, next one is the non-current investments. So, in this we have the non-current investments. So, any investment which is made by the company, whether it is a government company or whether it is any private company, it can be shown under this heading. Then the deferred tax assets. So, if the company has already paid in advance any of the tax liability, that can be shown here. So long-term loans and advances. Suppose the company has lent to its outsiders any loans and advances, that can be shown here. And then the other current assets. So other assets, small assets, it may be the stock or it may be the cash, etc. that can be shown here. So that will be the other non-current assets. Then next we have the current assets. Now in this we have the current investment. So what are the investments made by the company? Second one is inventories. Inventories means stock of the company. Then we have the trade receivables, or in other words we call it as the sundry debtors. Then cash and cash equivalents. So what is the cash paid and what is the cash equivalent in the bank? That amount will be mentioned. Short-term loans and advances which are given, and other current assets, and then we have the total. So we have this format of the balance sheet of the company. Next, we have the form of the statement of profit and loss account. So here we may write the name of the company, XYZ Company Limited, profit and loss account for the period 31st March, and we have to write the year. Now, here it starts from revenue from operations and note number is 22. Revenue from operations means all the business operations, whatever has been carried out and whatever is the in revenue which has been received by the business. So that amount has to be mentioned here. And in addition to business operations, if the company has received any income in the form of rent, commission, brokerage, etc. So that will be added, and then we have the total revenue. So revenue from operations plus other income, we have the total revenue. Next, we have the expenses. So in this expenses, we have the cost of materials consumed. Now what is the cost of raw materials which they have purchased and what is the cost of materials which you have consumed? So that explanation for that will be mentioned under note number 24. Next is purchases of stock in trade. So what is the purchases of stock in trade? The amount will be mentioned and an explanation to that will be mentioned under note number 25. Change in the inventories of finished goods. So in the finished goods, how many of them have been sold and how many of them are still remaining with the business? So whatever is the amount mentioned, so that should be written here. Then next is work in progress and stock in trade. What is the actual work in progress and what is the stock in trade? That will be mentioned under note number 26. So it will be an explanatory note for the work in progress and stock in trade. So next is the employee benefit expenses. Now under this employee benefit expenses, we will have to make a note of the whatever is the salary which is being paid to the employees, or whether you are paying any provident fund or any gratuity to the employees, or it is for any educational loan for the employees. So all that expenses for which the employees are benefited, all those expenses will be mentioned under note number 27. Next is the finance cost. Under this finance cost, we have the interest which has been paid to the bank or interest which has been paid to the debenture holders. All those interests, they will be considered as the finance cost of the business. Then next one is the depreciation and amortization expenses. Now what do we mean by depreciation? Depreciation is nothing but the reduction in the value of the asset. So over a period of years, the asset value will keep on reducing, and that reduced value we call it as the depreciation. Now this depreciation and amortization expenses, we will be having an explanation in note number 29. And other expenses, all those expenses which cannot be classified under these heads, so they will be mentioned in note number 30. So in note number 30, you write all the expenses one by one, total it up and put it in this column, and then we have the total expenses. So whatever is the expenditure from here to here, so all that we total it, then we get the total expenses. Now from the total expenses, we have profit before exceptional extraordinary items and tax. So that is, if you can see here the total revenue. The total revenue comprises of the third section here, and then here the total expenses are there. Now from the total revenue, we deduct the total expenses. Now we get the profit before tax. So whatever is the profit we got, so that we will write here. The next will be the exceptional items. So what are the exceptional items? So those items which are not there for the normal course of business, we call them as the exceptional items. Then we deduct from that the profit. We get profit before extraordinary items and tax. We deduct the extraordinary items. We get the profit before tax, and then we have to deduct the tax expenses. So from the tax expenses, if we deduct, we get profit or loss from continuing operations. Now from this, we have again discontinuing operations. We deduct, and then we get the profit or loss for the period. Now whatever the profit or loss we are getting, that is will be the earnings per equity share. So after all, deducting all these from discontinuing operations, continuing operations, extraordinary items, exceptional items. So after deducting all these things, we get the profit or loss for the company. And whatever is the profit we have got, so that has to be shared among the equity shareholders as dividend. So whatever is the return they are getting on their investment, so that will be shown here as earnings per equity share. So we have just discussed the format of the balance sheet and the format of the profit and loss account of the company. With this, we come to the end of this session. Hope you have all followed it. Thank you.